Of the big base metals, copper has been the runaway winner, recently hitting a 2-year high, while zinc and nickel have also seen gains. They're each underperforming copper at only 6-month highs. But what's going on, and can these broad gains last? Welcome to this edition of IG Trading the Markets podcast. I'm Jeremy Naylor. I'm with mining analyst Charles Gibson, who is sector head of mining at Edison Investment Research, where he's also a director. Charlie, good to talk to you. Thanks indeed for your time.
Not at all. Pleasure, Jeremy. Nice to be here.
Absolutely. It's good to talk to you. At this moment, all three of those metals have just come off a little bit, but are still broadly pointing up in the longer term picture. Now, we all know that markets are very good at pricing in future expectations, but to me, this has come at a strange time as we have what can only be said is little real visibility, many concerned about a potential second wave of COVID. What's going on with base metal pricing generally and copper specifically?
I think that there's an intricate dance here between supply and demand, as there always is. But in this case, there's some quite big plate shifting. And so what happened originally, if you sort of went back to the beginning of the year and the start of the whole COVID thing, and let's just talk about copper for a minute, what you saw is China had a problem with coronavirus. Now, of course, China is far and away the largest consumer of copper in the world. So people were worried about Chinese demand, and the copper price fell. Then it seemed to broaden beyond China. And what we saw is as it started to spread into the Western world, into Europe, into North America, we had a second leg down in March. Now, then what happened? So that was basically, if you like, that describes what happened with demand. So first of all, demand was perceived to be falling off or predicted to fall off in China. The copper price dropped. Then it was predicted to fall off in the United States and Europe as well. And there was a second leg down. And ever since then, what we've had is after a sort of a period of time, we've had hopes that both of those, that demand would begin to recover in all of those areas. In China, we've seen a lot of demand recovery, but at the same time that was happening, we had supply problems, particularly in South America, where those countries started being affected, and that was then affecting not demand, but supply. So first of all, we had demand drop off, if you like, twice. And just as demand was beginning to recover, we saw supply drop off. And so that has, if you like, that's given the impetus to the market that we've seen recently. And that is still effectively what's going on at the moment. I absolutely take your point. And I think the surprise is that copper has risen as high as it has, to the point at which now it appears to be, it is higher than it was at the beginning of the year. And that seems rather extraordinary, given that economic prospects of the world generally cannot be as good as they were at the start of the year.
Okay, so the next big question is where do we go from here? As I said, markets are very good at pricing in the future, but what is being priced in, and is it being overpriced, do you think, at these levels? If so, how far back is the retracement going to go to satisfy those that believe it has gone too far?
I think it's very difficult to tell because, one of my favorite sort of comments is there's a difference between a prophet and an analyst, and a prophet can tell you what the future holds, and an analyst can just tell you what might happen given certain scenarios. Now, sometimes those scenarios are obvious, and sometimes they're not at all obvious. And I think we're in a situation now where the scenarios are not obvious, and basically, in order to be able to tell what happens in the future, you have to be a sort of a virus expert, and I wouldn't claim to be those things. But what I can say is what is likely to happen, I think, is what we've seen in the past. So if there is a second wave, if there are reinfections, particularly in the likes of China and the Western world, then what we're going to see is the expectation that demand drops off. And then we've got what's happening in the supply side countries. Now, you can really narrow this down pretty much to South America. Are those countries being affected as well? And the slight sort of surprise here, the joker in the pack, if you like, is seasonality. And there is this sort of feeling that the coronavirus is a cold weather virus. So you have to look at where winter is. So I would have said what we could have, one of the scenarios we could have, if you like, is as the Northern Hemisphere goes into winter, let's say from September or October onwards, you may see coronavirus pick up. At the same time, if that coincides, well, obviously that coincides with summer in the southern hemisphere, but if it slackens off there, and that allows mines to the disruptions that are currently happening in the mines in South America in particular. Remember, Chile, via its effectively parastatal company Codelco, is by far the largest producer of copper in the world. So what you might see is demand drop off in the northern hemisphere as supply picks up from the southern hemisphere, and obviously that is not such a good scenario. One other way you could look at this is since the end of the war, there's been an extraordinarily close correlation between the copper price and the oil price. And you can put that down to oil being a proxy for energy costs and a very significant one. But nevertheless, the correlation is extremely good. And if you look at where the copper price is at the moment, it appears to be discounting an oil price of something in the range, $75 a barrel. Now, that was pretty normal thinking if you went back to 2019, but given where the oil price is at the moment, it looks pretty abnormal. So either you got to see global economic conditions come up to the sort of level that would justify an oil price of $75 a barrel. And if you see that scenario, then the copper price where it is fine. But if you think that economic activity will be at a lesser level such that the oil price is lesser, then probably you might expect to see copper give up some of those gains. Now, there are several jokers in the pack around here. I mean, obviously one of them is a potential vaccine and how that could change the landscape as we see it. The two things that are really also helping to support copper, though, and would suggest that it won't settle down to the same, it won't fall back to levels that we've seen in the past, are first of all, the US is pumping an awful lot of stimulus. In fact, not only the US, but countries around the world are putting an awful lot of stimulus into the system. And one of the ways they're doing that is by effectively printing an awful lot of paper dollars. And copper does have some aspects. It does have some aspects of being a monetary metal, just a little bit of that, what gold is benefiting from at the moment. More dollars, same amount of gold, you expect the gold price to go up. Well, there is a little bit of thinking, particularly in China, actually, that copper has the same, a little bit of the same dynamic does affect copper as well. And as a real asset, you would expect that. There's roughly the same amount of copper in the world. There are more dollars, do you expect the copper price to go up? So that is supportive of the copper price. And of course, the other thing is, and this is in the longer term, and investors may be looking out for this, but say 5 years, the expected electrification or wide-scale electrification of many economies compared to where they are at the moment, and the replacement of internal combustion engine with electrical motors. And we've heard those arguments before, but those are, if you like, the fundamental things that are helping to support copper over what I call a 5-year scenario. If you're looking on a 1-year scenario, as I say, there are a lot of jokers in the pack, but those are, just some of the ideas as to how you might frame looking at the copper price within that scenario.
Yeah, the electrification thing for me is the really big, exciting new possibility, not just for copper, of course, all the battery metals and all the associated metals that go with this move into electrification, as you say, in vehicles, including airplanes, of course, I noticed as well. There's some really exciting developments there, which gives a really sort of new angle to mining opportunities, I guess. Let me take a look at some of the companies, if I can, with you, and just quickly run through some of the businesses you're talking about. You talk about Codelco. We're hearing a lot, as you say, about South America and the problems that they've had with supply because of COVID and so forth. And of course, we know Chile is one of the world's largest copper producers, I think. What sort of companies are we looking at in terms of those that could benefit from the upside, or those that might suffer if we see much more downside coming through for copper?
It's actually, in some ways, it's quite difficult to generalize, but I mean, there have been some pretty extraordinary moves. You would probably expect it, but if you look at some of the biggest moves, and they're not necessarily all copper companies. Actually, I think what I perceive is the companies that are doing best are the ones that, if you like, copper gold. Now, copper and gold are both and silver are all in the same group in the periodic table of the elements, so you tend to find them together. But I suppose if you've got copper gold companies, then if you like, to some extent, they're a natural hedge, or you can look at them as both benefiting at the same time. But those are the companies that I see that have really performed strongly, certainly to date. So, and amongst the juniors, which are always considered to be the best performers in terms of price rises. That's not always the case, certainly not globally. But if you look at some markets like Canada, that is certainly the case. So, one of the best performers has gone from 6 cents to $1.50 is Free Gold Ventures. Again, it's copper gold. It's an explorer, but that is a pretty significant move. I mean, the 25 up 25 times in the space of just a matter of months. So that's one to look at. One that I think has the bellwether, if you like, I suppose, in the UK for the London market is Antofagasta. That has done very well, despite rumblings of the potential for strikes in South America, because coronavirus is one of the things that's bothering the unions at the moment, and they're saying unless their safety can be guaranteed by management, by the operators, then they're not very keen on going back to work. Now, Antofagasta has done extraordinarily well in the last few months, essentially on the back of the copper price, but that is certainly a worry to be aware of. A couple of stocks sort of underperformed, which are worth taking a look at, both of them London listed. Central Asia Metals, which produces copper from dumps in Kazakhstan, that's underperformed. I think that's underperformed probably because there are worries about some of its workers testing positive and concerns as to where that may go. But that underperformance may, of course, be an opportunity. SolGold, explorer in South America, in Ecuador, with some very exciting drilling results. That is in a sort of hostile takeover battle at the moment. That is to say, it has made a hostile approach to a company called Cornerstone, which jointly owns one of its assets, and that has probably held the shares back as well. Maybe wait for a little bit of clarity on that, but certainly a company that has the potential to move and has notably been relatively subdued as long as the copper price has been going up. Other explorers, you could look at Los Andes Copper. No surprises for guessing what that does and where it does it, but their share price up 2 times. Here's one that could be of interest. Copper gold in Africa rather than South America, but KEFI, I'd say well-known small junior gold mining explorer on the Arabian-Nubian Shield. So we're looking sort of Ethiopia across to Saudi Arabia. Now, its lead project is undoubtedly a gold one, but that entire area is very prospective for gold certainly, but also for copper, particularly on the Saudi Arabian side. And it's putting a lot more emphasis on its copper finds in its exploration prospects in Saudi Arabia at the moment, called Hawiyah. In fact, there was an announcement about that earlier today. So, and that has pushed the share price up about 70% over the course of the last month. And finally, I suppose one again. Its lead project is a gold one, but is Alkane Resources. That's one that's listed in Australia, but that's gone up 3 times in the space of the last few months. Again, its lead producing project is a gold project. All of the assets are in Australia, so less political risk than in other parts of the world, obviously. But it's been drilling in an area of one particular prospect called Boda in its North Molong series of tenements, and it's got some very exciting drill results. It looks like, if you like, it's got a very large porphyry system that it's intersected. So that's one that, if you like, could have a tiger by the tail. That's not quite fair. It has potential to turn into a very large copper gold prospect of a type that is already mined by majors in that area. Just it's, if you like, in the same postcode. So Alkane one to look at as well. Finally, I suppose if you want a medium-sized producer that has, I suppose, roughly performed in line with how you would expect, given that the copper price has been moving in its direction, and it's a producer, is Sierra Metals out of Canada, and that is up about 50% over the course of last month. So that gives you a smattering. If you're feeling nervous, of course, you can always retreat to the likes of Rio Tinto. It's much less of a copper company than it used to be 20 years ago, much more iron ore there now, but there's still a fairly significant contribution from its copper assets at the same time. So, if you're of a nervous disposition and you want to dip your toe in it, then you can always go for the diversified super majors.
and a safety net. Look, Charles, thanks indeed for joining us. It's a great pleasure to be able to catch up with you again with a quick trip round the opportunities within the copper space. That's Charles Gibson, head of sector mining at Edison Investment Research, where he's also a director. And reminder, of course, that past performance is not a guide to any future pricing. That's today's IG Trading the Markets podcast. I'm Jeremy Naylor.